Good morning, everybody. This is Kirk Spano. It is Monday, November 17th, 2025, and the ground in Milwaukee was frosty this morning, and it was a balmy 29 degrees. Crazy. Last week it was in the 70s. So I am going to jump on an airplane and go to Arizona. Not much for the winters anymore, even though our winters are shorter and milder. All right. What do we want to talk about? Trip to Chandler. I'll be there later on tonight, Monday, and I have appointments on Tuesday and Thursday. I have family stuff on Wednesday and Friday, but on Friday morning, I have a table for 8 reserved. You are invited at Wonderful Wanda's, just off of Highway 10, right to make it easy for everybody who's coming in on the highway. So if you want to meet me at Wonderful Wanda's, go ahead and put a comment below the article after I fire this out this afternoon, just saying that you might be there. If I see more than 7 people RSVP, last time there was 3, I'll reserve a bigger table. But it sounds like it might be 4 or 5 this time. So anybody who wants to meet up in Chandler on Friday at 9:30 a.m., I have a table reserved. So that's that. All right. I don't always work directly from Luke Grumman's Forest for the Trees tree rings, but today I'm going to because it was just that good of an addition. Now, in the past, I have provided the PDF for you, and Luke has asked us not to do that. So I'm going to kind of go through this whole thing. You can read some of it on the screen. And if you want to subscribe to Tree Rings, it's not cheap, $99 a month, but it's good stuff to follow along. It's not much different than the story I tell. He just only publishes one thing a week, so it's a pretty good piece to go through on a Saturday morning. All right, so I want to cover number 6. The deficit in the U.S. is 33% bigger than it was when we were at full employment in 2019. And we are at full employment now. I want to show you what this chart looks like, though. In 2019, we had the federal deficit as a percent of gross domestic product really ended up getting to be huge going into COVID, right? So we ran a gigantic deficit. This is inverted. And unemployment fell off a cliff. We ended up getting inflation after that because we printed all that money. Well, we are seeing employment just start to tail off, and the deficit is still really big. So what happens next year when we have to refinance $11 trillion of U.S. Treasury debt? More than we've ever had to do ever before. And the next 2 years after that are about the same. I want to talk to you about how the U.S. Treasury debt is structured. About $5 trillion of the U.S. Treasury debt is long-term. And that is the stuff that we have been turning into 2-year debt for the most part in the last 5 years. Janet Yellen and now Scott Bessent have both been taking the long-term debt and turning it into short-term debt, which is why there's so much debt that has to be rolled the next 3 years. It's all compacted into this little 3-year period. Only about $5 trillion of long-term debt left, maybe 6. So with all that debt due, what are their options? Well, their options are just roll it out 2 more years again, in which case they'd be paying about 3 to 4%, and they still haven't reduced the interest burden that the United States is paying. And honestly, a 4% interest burden isn't that high. The problem isn't the interest rate, which they keep harping about the interest rate. It's really that the debt is so big. And remember, we're going to have over $2 trillion of new deficit spending next year because all this talk about tariff revenues, it really hasn't materialized. Few $100 billion. When he said trillions a week or so ago, I mean, it's just blatant lying. So what should we expect? Well, the inflation that's coming isn't from the tariffs. Why? Because the tariffs have kind of put a tamper on the economy. slowing the economy down, which is why unemployment is falling, which is, partially because of AI as well. There's a chart out there that shows that hiring basically froze once ChatGPT was introduced. So what we have now is a situation that we're going into something that we've never seen before, which is over the next 3 years, we have over $30 trillion of debt that we have to do something with. We have to finance it somehow. And the international markets, frankly, just don't have the money to increase the amount of debt that they've been buying. And in a tariff-driven era, for the purpose of negotiating deals, we would expect a couple of things. And it sounds stagflationary. I would call it stagflationary light, which is what one of the former Fed presidents called it a few weeks ago. And that is, we have less hiring, kind of a stable economy, slowed a little bit, but that was off of a bit of a sugar high, and a lot of debt to roll. So how do we finance that debt? There's really only one way, in my opinion, that will seriously be considered, and that is quantitative easing. I think all roads lead to quantitative easing. All roads lead to quantitative easing. All roads lead to QE. That sounds like a future article title, doesn't it? Now, how long does it take to get down that road? If I had to guess, I would say probably Q3 next year, with the prerequisite debt crisis in Q2. So we'll have maybe 2, 3, 4 months of corrective action and a tighter economy in the spring, which is not atypical to begin with. It'll just be amplified if it happens that way. And then the new Fed chairman will chair his first meeting at the end of June, I believe. Probably will do quantitative easing if things get too tight. And that quantitative easing will be what's inflationary. The tariffs, as we have seen at the grocery store, has anybody gone to buy a steak lately? I really felt like, pan frying a steak on Friday night. And the cheapest steak that I could find that I liked was $25 a pound. And the one that I really wanted was $35 a pound. So what did Kirk do? Being the north side of Milwaukee industrial kid, I bought ground sirloin for $10. And I made mushroom Swiss burgers. I like those too. So yes, I like salmon steak too. It's just, but I order that from Alaska usually, and it comes frozen to me every other month. We'll get inflation again, because the only way to get out of our debt that I think will be seriously considered this time will be quantitative easing. Now, there's other ways to solve our debt problem. And I just talked to Luke Grumman about one of them on Twitter. You can find it on Twitter if you want to, on X. I said we should do quantitative easing to buy back all of our long-term debt and turn some of the short-term debt into long-term debt and jam it into a Social Security lockbox. Well, what does that do? Because we can manipulate that, right? There's no outside investor. We can bring the interest rate down to between 2 and 3%. We can explain it as, well, that's about what inflation is, and then term out the debt to between 30 and 50 years, 20 and 50 years, something like that. And it's jammed into the Social Security fund, which would truly become a fund at that point. And it drips into the economy over a really long period of time, rather than getting all crammed in a couple of years, creating inflation. I think that will happen someday, what I just described. I don't think it'll be this time. If they do it this time, that's awesome. I have sent the idea to Scott Bessent, to the people on the Republican side of the aisle that I know, and some of the Democrats. We'll see if that happens. I'm still trying to get my interview with a Fed president, by the way. I was given a very firm maybe. We'll see how that turns out. We could also raise taxes a lot and cut entitlements, right? We could just slash Social Security by 30%. The problem with anything that would cut the social safety net is that then you just get more crime and more black market, right? And more anger. There's not really an effective way to cut Social Security or Medicare or Medicaid or SNAP. Can't be done. All those things can be more efficient though. And from healthcare to the agricultural system, there are common sense fixes that make sense in the intermediate and long term, But in the short term, somebody's ox gets gored. And right, they scream about that. And they have lobbyists. So everything that's a problem is fixable. It's not fixable by socialism, because that just means everybody gets equally poor at some point, except for the intelligentsia that ends up having a great standard of living. Just 1%, a different 1% than, the current 1%. So there's a way to fix everything. There is. And eventually it'll happen where we find balance in the force. It won't be next year. Like I said, if it is, I will be very, very pleasantly shocked. Next year, Q3, I think, and I can be wrong, I think we get quantitative easing to deal with the debt. And that turns into inflation, and that turns into somebody else's debt problem down the road. So in an inflationary environment, what is it important to own? Assets that benefit from inflation. So that's what we need to focus on. Between now and the crisis that creates quantitative easing, though, at some point we have to really start playing a lot of defense. Over the next 3 months, however, we should expect a lot of money to come into the market. Not only do we have the seasonal thing, right? The Santa Claus rally at the end of the year, and then January effect. And these have to do with retirement plans and budgets, corporate budgets. Money that hasn't been spent in a budget gets spent by the end of the year most often because they don't want their budget cut next year. And then the new budgets hit in January. People who had run out of money, now they have money again. And you have all the retirement plan money going in December and January for the most part. And there's a trickle of retirement plan money in February, March into the early part of April too. But the big hunks are December and January. In addition to that, the government just reopened. And there is about $1 trillion in the Treasury General Account, TGA. Raul Paul mentions it here. One of the things that he agrees with Grumman is that eventually we get quantitative easing to inflate away the debt. There's probably a crisis before that happens. So you'll have to have a quarter or two of defense, but then you have to buy the correction. Nobody knows what the magnitude of the correction will be. I suspect in the large caps, it'll be bigger than people expect because twice as many people trade today as did pre-COVID, and they trade twice as much as the traders pre-COVID. So you got about a 4x, the number 4 and the letter X, not 4x, but a 4 times multiple on the amount of trading that goes on today. It is a very gambler-like mentality. The weird thing is a lot of millennials are really good at it. In all the Discord and trading rooms that I pop my head into and lurk and spy, they all say the same thing. When the 20-day moving average breaks, start to sell. And then if the 50-day moving average breaks, sell what's left and probably go short. Then when we get back to the 200-day moving average, buy back. So when you take a look at charts, you should be looking at the 20-day moving average, the 50-day moving average, and the 200-day moving average. 20 and 50 are the triggers. 200 is the target. I think we get a little bit of rally here for the next couple months. And as I said, in my last 2 macro pieces, I am getting very defensive by the 3rd Friday in January. And I'll reassess then. Suddenly the world is better by then. Hey, great. I can always sell more cash secured puts. And that's why I sell cash secured puts most months. Now, there's a couple of months a year where I back off. And right now, the plan is to back off in January. Doesn't mean I'll stick with that decision. I'll get to January. I'll assess. Maybe we'll have had a little correction already by then, and I can sell a few cash secured puts. Maybe I have to wait. Maybe I have to skip more than 1 or 2 months. We'll see. There is no set it, forget it. There is no automatic. There is no magic. There is no system that always works perfectly. All you can do is month to month and quarter to quarter and year to year, make asset allocation decisions that make sense to you based on what you see, what you know, and what your risk tolerance is. So I talked to a client this morning, and he had brought up the tariffs. He's a little skittish about the volatility of the last month. And I will just say, with regard to the tariffs, I don't really think you need to think about it too much. I have said in the past that I thought the tariff mania, fears, narratives were all overdone because eventually they were all reversible if they needed to be. And we are seeing certain tariffs get reversed on food right now, which is why I brought up my steak. I just wanted a ribeye. I just wanted to grill a ribeye, put it in a pan with some garlic and butter, a little olive oil, sear it real good on both sides and turn the heat off and cover it. Let it get the medium rare. Let that fat melt. Good stuff, right? But I had mushroom Swiss burgers. I'm getting really good at making the mushroom sauce, by the way. Campbell's golden mushroom soup. That's the trick. Saute your mushrooms, a little olive oil, a little butter, a little garlic, Worcestershire sauce for about a minute. Let it heat, and then put your Campbell's golden mushroom soup in. And you will also have really good mushroom Swiss burgers. All right. That is your dietary tip of the day. Now, a number of other things are going on in the economy. We have a really wicked crossover here in Bitcoin. I think I have that chart here. Grumman put this chart together on Bitcoin. Bitcoin's down to 94,000 today. I think it's going to get down to 70. It might go lower. When this chart rolls over, Bitcoin rolls over. I've seen it all 3 times. The corrections in the past have been as much as 70% on Bitcoin. I don't see that happening. I see about 35% down from the top, give or take. So just to kind of explain this, this is a long-term momentum indicator that's smoothed out. And when this momentum breaks, Bitcoin corrects. In the past, the corrections have been pretty large. I think you can expect about half of that this time. So Bitcoin in the 70s is going to be pretty interesting to me because when they print money, Bitcoin should do well and gold should too. If we take a look at the gold chart, it's on kind of a second dip right now. If gold drops 10 to 20 more dollars an ounce, I'm going to look at selling some cash secured puts on GLD. Remember, I already own GLD and the 401k plan that I manage for a couple companies, and gold has done very well. I'd probably be interested in silver on a big correction too, because the amount of silver that goes into solar is massive. And I think that solar is a no-brainer that is coming someday. So here's his verbiage. Basically, and he's been doing this as long as me, when certain things happen that only happen every now and then and are always correlated to a certain other action, market correction or market going up, you should pay attention. These are things that are rare, but always lead to the same thing. Remember, I told you I sold some of my cold storage Bitcoin a few weeks ago? This is partially why. And suddenly I'm pretty cash rich. That farm that I told you about 4 or 5 years ago, that me and another guy helped finance for the farmer made so much money in the last 5 years farming soybeans, wheat, corn, pumpkins, and produce, that not only did he farm, this guy worked so hard, and he's not 40 yet. He was going to farmers markets, and he had his own little stand on the weekend, I think Friday afternoon and Saturday morning. He paid us back. Remember I told you that I thought maybe I'd get this farm put to me where I'd have to end up owning the farm? And I kind of was okay with that because I would just cut another deal. I got a check. So in 5 years, I made 10% a year on my money. And then when he paid us back, we got double. A pretty good deal for everybody, because in 5 years of sweat equity, he now owns a farm. Granted, he had to finance it, but he financed it at the price that we bought it 5 years ago, and it's worth more now. In any case, I've been accumulating cash in weird places, not so much in my portfolio, because I want to hold my stocks that I still like until January and then assess. Not really reaching out for any commitments beyond January, not yet. He talked about data centers here. And one of the reasons why I've gotten back into energy in a pretty big way over the course of this year is that energy is one of the things that hasn't been priced into the AI boom yet. Microsoft CEO Satya Nadella points out that physical infrastructure and energy access are the 2 things that are going to constrain AI in the future for the next 3 to 7 years. One of the reasons I tell you that if you want to invest in real estate, talk to me about Wisconsin. I've got agents for you and I got deals for you. Is that Wisconsin has water. How much water? Enough water that we already have 43 data centers, but we have 5 massive ones going in. Now, this one had to change plans because where they were going to put it, nobody liked. Microsoft is building half an hour away from me. Meta is building a half an hour away from me. QTS is out in Madison, Wisconsin. In Port Washington, it's Oracle and OpenAI, right? This one's approved. I think they're breaking ground right now. Why? Because of the water. We have so much water. We got Lake Michigan. We have more lakes than Minnesota. Not that we're going to suck water out of them, but we're a water-rich area. And the data centers are cooled by water and fluids more than air. Why? Because the air-cooled ones make noise that we know actually have health effects on anybody who is within the sonic and auditory range of them. So the water-cooled and fluid-cooled are the future, and they're going to eventually figure out a way to have a kind of like in a car, you have lubricants. They're going to come up with something, and it's going to take the initial water input, but they're going to come up with a chemical way of treating it to keep it cool, I would imagine. Probably some sort of water cycle sort of thing. At Discovery World in Milwaukee, they have something about that. That's where I take the grandkids, and they play, and I learn. Actually, they learn too, but they have more fun. I'm reading everything. Natural gas has indeed gotten cheap because the AI build out is still being built out. And those companies in the western part of Texas that suddenly have demand and transportation for their natural gas, three companies that we've invested in, suddenly are very attractive because nobody is factoring in the fact that next year and the year after and the year after that, they're going to have all kinds more natural gas revenues than they had in the past. So everybody values them like oil companies, but they're going to have a ton of natural gas revenue they didn't have before because there's pipes and there's demand. And they're building data centers in West Texas too, and in Dallas, Fort Worth, right? So it's not just Austin. It's all the big cities in Texas. So when I pick out these companies, I'm not just buying an industry. Oh, this looks good. I'm looking for something that AI can't tell me unless I really ask a good question. And most people don't ask AI very good questions. And remember, AI does not think. It regurgitates. What you get from AI is just the accumulation of what's on the internet already, specific to how you asked your question, skewed by whether or not the AI is lazy that day, or confused, or having a hallucination, or being standoffish. And I say that, and people are like, oh, AI doesn't do that. Yeah, it does. Why? Who did AI learn from? Us. So depending on how you say things to an AI, you will trigger a different response with different information and potentially a freaking attitude. Doesn't mean it's thinking, it's reflecting and it's regurgitating. Keep that in mind when you play with Perplexity or Gemini or ChatGPT or whichever one you like to play with. Now, this comes back to energy and rare earth materials and drones. Why do I own 2 drone companies? And why do I own the 2 that I own? Because a lot of the weaponry out there requires rare earth metals, and China just said they're not going to sell rare earth metals to our defense industry to the best that they can constrain it, right? We'll cheat too. And our 10X facility won't be up for a couple more years, right? MP Materials, probably more of a 2027 story, 2028 even. That's why it's correcting right now. People don't want to wait. If we find a buyable bottom zone on MP, we probably want to get back in. The 2 drone makers that we're in, one, why did I buy it? Because the fix is in, right? It's a Trump kid is on the board and a major shareholder. And the other one sells drones to NATO. And little Vladdy Putin, big skim king that he is, keeps the Ukraine war going because it's good for him. Not good for Russia, not good for Ukraine, not good for the world, but it puts money in his pocket. And if rare earth metals are a little bit constrained going forward, and drone is the new warfare, they're just going to make a lot of drones. And one of the companies we're in makes drones for NATO and us. And the other one has a connection, direct line to the White House. Those are 2 drone companies I own because they're dirt cheap. They got contracts, they're expanding, and they're connected. And by the way, the energy to move everything over here when it comes to supply chains. It's talking about the gambling nature of some of the millennials and Gen Z. A lot of them gamble on the meme coins, and boy, were they mad when those crashed about a month ago. Those were the bad ones. The good ones use technical indicators. Michael Burry, closing down Scion Asset Management. Remember, that was only 20 or 30% of his money with a couple of outside investors. And people want to say that he's bad at what he does. He made a lot of money this year. He's up like 40, 50% this year. And suddenly Palantir and NVIDIA, the companies that he shorted recently, are going down. So he didn't get out of money management. He just opened a family office next week. Next week, his family office officially opens. And he might still have a couple of clients, but because it's a family office and not a hedge fund, he doesn't have to report anymore. He doesn't have to tell the SEC anything. And that's what he wanted. So all these people, all these kids that rip on Michael Burry, a guy who turned nothing into 9 figures, I think you should have a come to God moment about who you listen to. Now, Burry's been early on things before, no doubt. But the valuations that he's talking about, you cannot really question him on that stuff. What you can question him on is the timing of the trades. And the problem with shorting, as we've covered before many times, is that not only do you have to be right, you have to be what? Perfectly timed. And that part is really hard. Because markets can, in fact, as the saying goes, remain what? Irrational longer than a short can remain solvent. So even though he's been imperfect, he actually made money. He's made a lot of it. You know, one of his biggest investments several years ago was water. And those basically all doubled and tripled for him. Value investing in the long term is a thing. The question that you have to ask yourself is, do you have the patience to listen to Charlie Munger and accept that money is made in the waiting? So when we buy a Metis and have to wait years for it to go from dirt cheap to not dirt cheap, right? It just chops around as it waits for government policy regulation to keep up with the laws and the promises. When we buy Sun Power at $150 million market cap, when the 3 companies combined that it came from, right? Sundar, Blue Raven, and the skeleton of Sun Power, at one point, those companies were worth over $10 billion. And solar is going to get bigger than it's ever been. I'm not saying that SunPower gets back to $10 billion, but at $150 million, we have a hell of a margin of safety. If it only gets to $2 or $3 billion in the next 5, 6, 7 years, we did pretty good. And to me, that's the bottom of the range it'll get to. It might get to $10 billion. Remember when I talked about AST Space Mobile this way when it was 5? Some people sold it at 10 and 15. It went to 100 for a hot minute. And what is it now? 70, 60, something like that. I said sell it between 75 and 100. It's down to 57. It's almost time to buy AST Space Mobile back again. Because our estimate was that it'll get to between 50 billion and 100 billion. This is back when it was a billion or 2 or 3 billion, whatever it was. Well, right now it's back under 25 billion. And my estimate has changed from 50 to 100 billion to 100 billion to 200 billion. So if 100 billion is the low end of the new range and we're under 25 billion, it means you still have a 4x. And as it closes in on 20 billion market cap, maybe there's still a 10x in AST Space Mobile. Shh, don't tell anybody we're thinking about buying it back. I pissed off all those people on AST Space Mobile on the internet, and I'm not going to tell them that we're buying it back until after we've done it. Serves them right for being mean to me. Rocket Lab is dipped. We trimmed that near the top 2. They've had some delays, as is the case often with space. Space is hard. So they call it the void. That's why so many cool movies come from it. But Rocket Lab is going to benefit from not everybody wanting to do business with Elon Musk. And they are basically number 2 in the game. Android did pretty good being number 2 to Apple, right? Same thing with personalities. Everybody likes the guy from Rocket Lab. All right, we already talked about this. They have to QE. All roads lead to QE. I'm just going to touch on this because people worry about it. Technology has always displaced certain jobs and created other jobs. I think that'll be true this time too, but I also think it shortens the work week. I really do believe that the work week of the future will be around 30 hours instead of around 40 hours. And I think first and second shift might come back. And I think 3 on, 3 off might come back. All sorts of things, depending on the industry. People who work more on the weekends in hospitality, companies that want to give greater customer service by having first and second shift, 3 on, 3 off, something like that. Maybe a little bit of both. But ultimately, I actually think that employment, the percentage of people working, I don't really think it's going to change much. I just think that it's different shift coverage and different hours. And right now, we have a shortage of over 5 million skilled tradespeople in the United States, and that's going up because of the boomers retiring. If we're smart, We will urge, and actually President Trump has done this to his credit, colleges and universities to add skilled trades training incorporated with a little bit of business and liberal education. Liberal, not in the political sense, but in the just getting smarter sense, learning about history, learning how to write, right? Reading some literature, having an appreciation of other things in society and in civilization. Everything is fixable. And I want that to always be at the core of your being when you invest, because anything that is fixable can also be profitable. So when this big correction hits, this debt-induced correction hits, and when the inflation that follows hits, just think of it as a trade, as a cycle, not the end of the world, because it won't be. One of the other things I want to hit on is the stable coins. They're not that big of a deal. I just don't see it. I could be wrong about this. I just think it's kind of a cannibalization of other stuff. Maybe it helps dollarize emerging markets to an extent, but for that to happen, we probably should be nice to people. Just saying. And I talked about this a minute ago. The rare earths are going to get scarce, so the traditional missiles and things like that, it's going to turn into drones, and that's why we're buying those two drone stocks really cheap. Let's take a look at a couple of charts. Remember, what's the pattern we like to see? Red, red, green, or gray, red, green, right? This is the oscillator. What's this company here? Arrow Group Holdings. Who are they? Oh, it's a busted IPO. I think I read something about these guys. Some of you are following along with what I'm doing, right? This is a busted IPO of a company that's expanding their productive capacity with a couple of joint ventures and the likelihood of some really big contracts coming soon. I wasn't sure that it would break below the red line, but it did. And this is traders being traders, selling the moving averages. Let's do a 4-hour chart. Look, what's that? That's a green arrow. You are getting a double buy sign. Stock is up today. You want to buy this stock right now if you think NATO is going to buy some more of their drones. It's oversold. Traders did what traders do. Be the Karate Kid. Use their leverage against them. Buy it near the bottom. I don't even know that I would sell the cash secured puts right here. I would just buy it. Unless you already got a ton. Then sell cash secured puts. Take a look at Intel. Look at that spike, the Trump bump. Now it's coming back. They still have years to go before they fully execute the plan that isn't finalized, that isn't financed, that isn't completely hashed out. I think you're going to get a chance to buy this under 30 again, and probably you should. And you should probably sell cash secured puts when it gets down there. So when it gets in this yellow zone, right, we know this is the fair value gap where the institutions will get interested again, right? They get their redo, their playground redo. You want to take the redo on Intel too. Samsara, where is it? Right here. Red, red, green, right? That's the shortcut. It can still come down. It to me, it still has falling knife potential. I think this is just the algorithm gone crazy usually. You get this a lot. Algorithm gone crazy. And this is like if everybody hated it at the same time and they had a bunch of bad news and a financial problem and aliens attacked. It can happen. It just doesn't happen often. These Elliott waves here are probably more likely. So this is one that you should learn about and then start measuring, right? Our typical weekly time frame. At some point, you do what I did here with Arrow and you shorten up the time frame. Say, okay, where are we at? Buy signals on the daily and the 4-hour. So at some point, this is going to have buy signals. Right now, it's got the white, it's got the dot, not the arrow. That's the pay attention, right? It doesn't even have the pay attention on the daily yet. It means there's probably more downside. The weekly says somewhere from teens to upper 20s. You just have to measure it in real time. You know, right now it's 37, so it still has some downside. And then Caesars. So I just booked my stay in Vegas for December, going to visit my parents. My dad has a pizza recipe that he has finally perfected after 30 years. I'm going to give it a try. Caesars has a lot of debt. Carl Icahn is extracting money from the company. And in the short run, I think Vegas remains challenged. However, online gambling is a thing and it's getting bigger. And World Series of Poker is still hosted by these guys, even though they don't make the money on the tournaments anymore. Just people stay at the hotel. And they have a 10-year deal. What does that mean for the hotel rates they're going to charge in the future? They ain't going to be so cheap anymore. And they own 5 of the properties over there on the strip, right? They're not Vici. They still own 5 hotels: Horseshoe, Paris, Planet Hollywood, Lincoln, Flamingo, I think. I could have one of those wrong. In any case, why do I point out Caesars? Because every time Caesars crashes, you buy it. I don't know if it's going down to single digits this time. If it does, like on a recession scare, you should pay attention because it has a good deleveraging story that it can employ when the time comes. Hopefully, Carl Icahn stops sucking the blood out of it, and there'll be a moment where it probably is a buy. I don't know when that is. When it fell off a cliff here and we bought it, we should have held it a lot longer. Lesson learned. Here was a little bit of a rally, but now we're in the downward spiral. We're closing in on the bottom. I don't know if this bottom is 15 or 10 or 5. I don't know. But if we get a straight down line at some point, we really want to pay attention because we could suddenly get a 10x opportunity on something that never dies, right? Gambling is not going away. So unless they bankrupt this thing, which we got to keep an eye on, there's probably an opportunity coming, I think, next year. So I'm giving you the heads up now. Learn about the company. All right. Any questions before I call it a day? Somebody mentioned MicroStrategy is down a lot. Yeah. I don't even know what the symbol is anymore. Micro MSTR. Yeah. I mean, I told you I thought it would get down to 100 or lower hundreds. Yeah. I mean, down to 194. When Bitcoin stops going down, if MicroStrategy hasn't done something dumb with their balance sheet, you look for an opportunity with them. You got to remember they dilute, and they will dilute a lot. You buy MicroStrategy 2 days or 3 days after it dilutes everybody and pisses everyone off, maybe a week later. Now, I don't like Michael Saylor. I think that he's full of shit in many ways, and I think he's full of himself in many ways. Remember, he has lost more money in a day than anybody ever, I believe. And he's doing it again now. I mean, there's a chance that this thing goes way under 100. Understand it, though. It's a leveraged bet on Bitcoin. So if you can find the week where it bottoms and there's a pivot on Bitcoin back up, and if you want high-risk levered Bitcoin and you can't do it with futures because you don't know how or you don't want to use margin, MicroStrategy is the alternative. I hope that does not come off as a ringing endorsement because it is not. But if you feel gambly someday, that's how you would get in there. All right. Nobody else popped anything up. In that case, I hope to see some of you in Chandler on Friday. I will be buying breakfast. Your eggs and coffee are on me, or waffles if you so choose. And yeah, have a good week. And I think we're just playing out a string here to see where things are at into the new year. So I have a lot of cash secured puts expiring each of the next 3 months, and I will decide what to do with the cash that I've accumulated come January. Or maybe I put it on pause and I wait till February. Or maybe I pause and I wait till March. I don't know. We'll see how things go. You can still ride certain things. Remember, a lot of the things we own really don't have much downside. We're just waiting for the upside. Ametis, every day we're closer to the IPO in India and more renewable natural gas income. And next year, $30 million extra dollars from the ethanol because the refinery is going to be that much more efficient. We'll find out about some of the other ones as they come. Most things natural gas will work out. All right. Have a good rest of the week. I will talk to you again next week, and I'll put out a couple of little quickie pieces before I head out this afternoon. Take care.